Well, Nvidia absolutely skyrocketing on some breaking news and a Palantir partnership announced between Nvidia and Palantir as well. But honestly, it's the numbers that are leading Nvidia to skyrocket, currently up 3%. In our course member live streams in the Alpha Report, we have a $240 price target on this. This is really exciting for Nvidia, but I want to break down the numbers for you to show you why this is moving the way it is and what Nvidia just said. Keep in mind, coupon code Schumer Siesta expires tomorrow night, but you already know about that over at meetkevin.com. So first of all, to really understand what's fueling all of this, you have to understand some of the creativity that's going around to keep money flowing into Nvidia. To some extent, it's kind of scary and weird, but listen to this. The creative deal making behind Meta's $30 billion data center financing. And this is made up of $27.5 billion of debt, $2.5 billion of equity. But basically, Meta, Mark Zuckerberg, he's like, look, we're going to be spending $72 billion of planned CapEx in 2025. A lot of that money is going to go into Nvidia chips. Probably somewhere around 60% just goes into Nvidia chips. That's what we see at companies like Oracle as well. They put about 60% into Nvidia and then 40% into the rest, whether it's AMD or water cooling hardware or racks, whatever, right? 60-40 is often what we've seen. Meta plans $100 billion CapEx spending in 2026. Which, if you combine that, 60% of 72 plus 60% of next year's CapEx is already $103 billion from Meta alone. Keep that number in mind because it becomes really important. I want you to see how much of a pie Meta probably is of Nvidia. And Meta just finalized this funding deal, and now Jensen is bragging about new big numbers. So I think there's a direct correlation here between this Meta financing deal and what's going on with Nvidia's announcement. But what I want you to understand is the following. This deal is being purposefully designed to not be owned by Meta. It's literally a bond deal that is due in 24 years. Now, to me, that's crazy because who would buy these bonds that are due in 2049, 24-year bonds? Well, who's buying it are companies like PIMCO, who bought $18 billion, BlackRock, and life insurance companies who want longer, buttered out yields, basically. So they get a 6.6-ish% yield. Some of them paid a premium, so maybe they got in the high fives or whatever. But they're getting a nice yield locked in for 24 years, and Meta gets no debt on their balance sheet. Now, how does that work? Creative financing. Yeah, that's literally what this whole piece is about. Bottom line, Meta doesn't want all of this debt on their balance sheet. So instead, what's going to happen is this Hyperion data center that Meta is going to lease is going to be owned by bondholders and these special purpose vehicles. Basically, a fancy creative structure so Meta can use the data center without showing the debt on their balance sheet. And because Meta is slicing up the leases into renewable 4-year terms on 11 buildings at the data center, Meta can actually walk away maybe not scot-free. They'll walk away at a discounted net present value of the remaining lease term. But Meta will be able to walk away from these data center bags if they need to. So think about what this means. It's actually crazy for this whole bubble that fuels, and it's really bullish for Nvidia, that fuels Nvidia. And I want to start with this debt because I want you to understand this, okay? Meta wants to spend big. Problem, people get worried about the balance sheet, basically how much debt the company has, okay? Well, in this case, Meta now gets a $27 billion data center, roughly $30 billion once you consider the investments, with zero debt showing on Meta's balance sheet, approved by the SEC and approved by credit rating agencies as not to affect Meta's credit rating because Meta's not responsible for the debt. Meta's only responsible for renewable 4-year leases, which won't even show up as long-term liabilities because of the way they structured this. So now all of a sudden what you have is this game where Meta basically gets a $27 billion data center and no debt, and they're leasing it at, a fraction of the expense for, whatever period of time they want it. Now, who ends up holding the bag? Not Meta. Brilliant for Meta. If all of these in 24 years, in 24 years, what do you think those Blackwell chips are going to be worth? The Blackwell chips will be worth zero. Nvidia will have made their bag. Meta will have made their bag. Guess who holds the real bag? Well, PIMCO and BlackRock and these life insurance companies, which who cares, right? But the point is, what it does is it opens the door to, guess what? More debt. And more debt and more of this creative financing at Meta or XAI. We already know XAI is basically out of freaking money. So XAI is also using these creative financing deals for their Colossus 2 facility. I'm not making this up. It's right here in the article. Elon Musk's XAI is using a similar arrangement to fund chips going into the Colossus 2 data center. They can't afford all these chips. There's not enough cash. So they have to come up with these creative long-term structures to coax life insurance companies to invest in these, to lock in these higher yields. But the people who are backing those bonds don't even realize they're signing up for a 24-year bond on a data center that's backed by chips that aren't going to be worth anything in 24 years. But who cares? Because guess who prints money today? Nvidia. Because what did Nvidia tell us today? And this is why Nvidia is skyrocketing. Nvidia told us that this $46 billion of revenue they make is nothing. 88% of this is data centers. So $41 billion is data centers. Well, guess what they just told us? For the next 6 quarters, they have $500 billion of orders for the next 6 quarters. What does that work out to? Divided by 6, that works out to $83 billion per quarter of data center revenue. Right now, they're only doing $41 billion. That is a double of data center revenue on a quarterly basis. Now, their forecast is that they'll probably be somewhere around $54 billion of total revenue. $54 billion total revenue at 88% means they're probably forecasting Q3 to be about $47 billion of data center revenue, okay? That is still almost a double. It's definitely a W. 83 divided by 47. That's a 76% upside to the quarterly revenue estimates for Nvidia. And if their margins stay consistent in this 72% gross margin basis, a lot of that is just going to come down to their net income, which is about 56%. Insane. More than 50 cents of every dollar goes to their bottom line. Folks, I kid you not, after taxes. After taxes, they take 56 cents of every dollar to the bottom line on these Blackwell chips. This company has the biggest PP in the world. The biggest pricing power in the world at Nvidia. It's absolutely insane. AMD doesn't hold a candle to this net income. AMD's net income is like half of Nvidia's. That's why people are so excited that AMD can catch up. I'm not trying to bag on AMD. I'm just saying the numbers are what they are, and it's one of the reasons, Nvidia is number one, is because their margins are insane relative to AMD's. But we don't have to talk AMD right now. AMD will benefit from all of these leasing situations as well. As Nvidia grows, AMD will grow as well. It's just 1/10 the size of Nvidia, which also explains why it has less pricing power. Just CUDA has created such a moat for Nvidia. As Jensen spoke about this morning at GTC, the more people develop on CUDA, the more strong the moat becomes. This is why AMD is trying to partner with companies like Oracle to create an open source model to sort of weaken that moat. Whatever. I like both companies. You can like both companies. I actually think the more AMD is above 232, the more Nvidia approaches my price target. And it's insane. I mean, look at this. It's literally about to hit $200. This is pumping, in addition to Trump tacoing, this is pumping the Qs right now, this announcement, which is amazing. Okay. Oh, this is interesting. Stellantis to deliver at least 5,000 Nvidia robotaxis for Uber. Wow. Nvidia says Uber ties up to include 100,000 vehicles. Uber shares up 1.2% on Nvidia partnership. Uber eyes fleet of 100,000 Nvidia-based robotaxis beginning in 2027. That's not a surprise. I've always said the biggest competitor to Tesla is not another automotive company. It's Nvidia. Nobody pays attention to Nvidia's automotive division. Nobody. And when you actually look at their press release, let's go into the NVIDIA press release. You can actually get a little bit of color on this. So if you go to NVIDIA's press release and you go to automotive here, automotive revenue is only $586 million in the quarter. That's literally 1 out of $80 go to NVIDIA's automotive side. That's it. 1 out of $80 that NVIDIA makes, automotive. And so guess what happens when all of a sudden now Stellantis wants to manufacture NVIDIA robotaxis, Uber wants NVIDIA robotaxis. That's a direct competitor to Tesla. Now, obviously Tesla has a data advantage for now, and that's probably a topic for a different video, but it's something to pay attention to. The point that I want to make though about NVIDIA is that right now Wall Street is estimating, and I put this in the stock tab for course members, but right now NVIDIA is estimated to grow EPS at 46. Let me double check this. It is expected to grow, that's 43.51% of EPS growth next year, with 20.3% EPS growth average over the next 4 years. But if we actually change just next year to, the 73% that we're probably gonna get, you should be bumping this probably to about 25% average annual growth. So I'm gonna do that. I'm gonna change NVIDIA's numbers to 25%. And if we do that, it's gonna change the PEG ratio substantially for NVIDIA from 2.14, where it sits right now, which is relatively low. And if we bump them to 25%, let's see how it changes. So if I go to 25% growth, and I update this in the back end for course members, you get the benefit of watching this video. Okay, then I go to the back end for the NVIDIA stock tab. We're at a 1.75 PEG right now on NVIDIA. Okay, what does that make the fair value for NVIDIA? Well, let's do the math on it. So this is just a quick example, by the way, of the style of fundamental analysis we do in the course member live streams every day. Like we did Wayfair and UPS this morning. They have their own little stock tab on this as well. But we calculate fair values off of this, right? So moving KPEG to 25% growth average next 4 years from 20.3% Wall Street, okay? That moves the fair value estimate for NVIDIA to 2.67 as a service provider times, I just need to get the current earnings per share, but then we're gonna multiply it by 25%, and then we're gonna grab the NVIDIA EPS at 4.51 for the end of the year, equals 2.67, Apple AI doesn't wanna work, that's fine, times 25 times 4.51, that's why I keep a $5 calculator on my desk. These numbers just actually move the fair value target up $60. These Jensen numbers literally move the fair value target for NVIDIA from 240 to 300. That's wild. That's a really nice move right there. So really impressive. I mean, very, very impressive numbers. And a lot of it, you have to say, is based on these insane financing deals that you're getting. That are just propping up the bubble. Like, let's be clear, like these chips will be worth zero in the long term. And that's why Meta is so brilliant. Like, why else is Meta doing this? Where Meta's like, hey, just in case, we want to be able to get out of these deals. And then who holds the bag? Some random Wall Street bag holders that ended up buying a AAA rated bag of crap that they were told was AAA rated and had a good yield. We are just now beginning the securitized bubble. This is insane. Anyway, if you want more of my perspectives, make sure to join me in the Meet Kevin report. Grab it every morning before the market opens up at meetkevin.com. You get lifetime access. You could write it off on your taxes. Use that coupon code Schumer Siesta and get yourself some big PP.
Big PP. Kevin is much more interested than most people, by the way, in the balance sheet.
Kevin is very talented. But I don't know if it's going to be him, but he's a very talented guy.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.